Hello, good day, guys. My name is Nick, technical analyst of SuperForex, and today we're looking at the analysis on the currency pair Aussie dollars. And the Australian dollar, recently has lost its ground for the second successive day, today being Thursday, and it extended its losses as we await news events surrounding gains ground around a stable US dollar as we focus on the US GDP. Australia's inflation is likely to stay above the RBA's target range of 2.0 to 3.0, while PBOC may cut the medium-term lending facility rate in the current quarter, while while the US dollar has faced some downward pressure despite the upbeat US PMI data. Now, US GDP annualized Q4 is expected to print a reading of 2.0% against 4.9% prior, and the Australian dollar loses its ground for the second successive day. On Thursday, the AUD USD pair has encountered some downward pressure, and following the release of a positive S&P Global Purchasing Manager Index PMI data from the United States on Wednesday. And this upbeat data could decrease the probability of rate cuts by the Federal Reserve Fed in March, prompting a decline in the AUD USD pair. And additionally, according to CME's Fed Watch tool, market-wide bets on a max rate cut from the Fed have now dropped to below 40%, a significant decline from around 80% recorded just a month ago. And Australian dollars experienced a decline despite the release of improved preliminary purchasing managers PMI data from Australia Wednesday. And the Reserve Bank of Australia's bulletin indicates that over the past 6 months, a couple of businesses have generally anticipated a moderation in their price growth, with the expectation that on average prices will stay above the RBA inflation target range of 2.0 to 3.0%, while the bulletin also notes that slower growth in demand and increased competition are anticipated factors that could possibly contribute to further deceleration and the growth of firms' prices in the upcoming quarters. Now, prior to this, we are still expecting a possible fallback, but for the short term, we might be seeing a series of ranges. And the US dollar index has made some effort to recover from recent losses despite a downbeat treasury yields. However, the US dollar faces challenges due to a risk-on market sentiment ahead of the Federal Reserve's on January 31st. So expecting ranges up, downward movements, and a possible halt at this point. Having our landmarks of ranging buy setups. So you buy when it's low and you sell when it's high. So that's our technical analysis on today's currency pair, AUD USD. Now let's move over to the stock markets. Hi, welcome back, guys. And on today's stock market, we're having a look at Siemens. And headlining, we're hearing that Siemens has been monitoring some Red Sea situation, but currently no big impact so far because Siemens is currently on its supply chain from the crisis that has been ships diverting to avoid missile attacks, and an executive board member had reported this on Tuesday. The German engineering group is using lessons learned from previous crises as well as its own technology to reduce problems. And this is what exactly could have some significant retracement on the market following a recent surge since the beginning of the year. And this might just have some little retracement, of course. We have learned a lot in the different supply chain crises and after COVID-19 also to make our supply chain more resilient. We have to understand the fact that a lot of impetus for the market might be signaling some sell trend because there are hyper cycles that are still growing at roughly double digit and may continue to grow, of course. While some areas like commercial buildings and particularly office are seeing some weaker demand for products and systems that operate in smart buildings. There is growth in other areas like healthcare, life science, and data sciences centers rather. But we could expect a decline and then possibly a retracement following any latest news involvement for the telecom giants. And that's our technical analysis on today's stock market. Siemens, I remain your host, Nick. Bye for now.